Good morning, everyone, and welcome. Thank you for joining us today, and thank you for taking the time out of your busy schedules to be here. On behalf of everyone at NFI Solutions, we're excited to have you with us today. Today's webinar focuses on Roth IRA conversion opportunities and current solutions available through Equitrust. Leading today's webinar is Bill Flikeid, NFI Solutions Sales Lead. Bill works closely with independent insurance professionals every day and will be guiding today's discussion and helping facilitate the presentation. Joining Bill is our special guest, Ryan Harms from Equitrust. Ryan will be presenting today's educational content, sharing current insights on IRA conversion strategies, the planning conversations agents are having with clients, and how Equitrust Solutions can help support those conversations. If you have any questions during the presentation, please submit them using the Q&A or chat feature. We'll answer as many as time allows during the discussion or at the end of today's webinar. With that, I'd like to turn things over to Bill. Bill, thank you for being here, and the webinar is all yours.
Thank you, Louisa. I am excited about today's topic. I think it really does. It hits on a few hot button things that are happening in our industry right now. And I think more importantly, what this ends up doing is creating opportunity for you guys as agents. And beyond that, it separates you from the rest of the pack. I think, we as advisors have done a pretty good job of separating our clients from market risk. But market risk isn't the only risk that's out there. Taxes is a big one. And I can almost guarantee that for the majority of your clients that are in that retiree stage, the biggest expense they're going to face in retirement is taxes. And this really covers a big part of that base. If you're not talking to your clients in terms of, tax bracket harvesting and, bracket topping, I think you're probably missing a little bit of an opportunity there. And ultimately, when your clients are at that stage of the game, there's a couple of things that they're more concerned about than they ever have been in the rest of their evolution of their financial life, and taxes is a big one. Nursing home and other things. But that rate of return, of course, we're always shooting for it. But if we can eliminate risk in other ways, taxes, those kinds of things, and that'll be the topic for today, then I think you're really addressing some issues. And instead of providing a product, you're providing solutions and you're providing a plan. So I'm excited for Ryan to present this to you guys. We'll end up kind of circling back at the end and, answering some questions and things. But, with that said, I'm going to turn it over to Ryan. Ryan, thank you for being here.
Yeah, thanks, Bill. I appreciate you kicking off here. And yeah, I'm really excited about this topic too. You guys have been a great partner with us here for the last couple of years that I've been working with you. And, this Roth conversion story that we have has been, a big part of your business. And we're looking forward to be able to offer this to more people and really give you a tool to help you help your clients better here. So kind of getting into the presentation, just a quick agenda for the day here. I want to start out by setting the stage for the Roth conversion story. I've got a quick recap of a recent webinar that we hosted with Becky Ruby Swansburg of Stonewood Financial. I'll give you a few solutions that we offer to help execute the strategy, mainly our Smart Boost Index, which is the first of its kind, 40% boost fixed index annuity. We also got our Market Edge bonus fixed index product that we'll be talking about a little bit. And then also dive in a little bit on the Bridge long-term care fixed index annuity. Bill kind of touched on that too. So if you've got questions, like Louisa said, there's a Q&A section. You can kind of type those in there as we go along, and then we'll address as many of them as we can here at the end. So getting into it, the advantages of a Roth IRA. So I want to do this quick recap of a webinar that we hosted again with Becky Ruby Swansburg, who's the CEO of Stonewood Financial. This is actually, it's recorded, it's on our website. And actually, I think it's part of the follow-up for today. We created a new digital sales kit that has a lot of the material that we offer for this. There's also a link to the recording of that digital sales kit. So make sure that you keep an eye out for the follow-up message from the webinar here today. So, but Becky is the author of a book called A Road Less Taxed. And she worked in the White House with the George W. Bush administration, and then also in the Capitol with the Speaker and a few Congress members. So she's someone who really does keep her finger on the pulse of what's going on in Washington, and a great speaker as far as this topic goes. So on that webinar, and it's 45-minute webinar, so definitely encourage you to get in there to check it out more in detail. But kind of the highlights were, she talks about taxes doing one of three things. They could go lower, they could stay the same, or they could go higher. And the real risk to your clients is if they go higher. So she says, let's take a look at what we know. We've been in a historically low tax environment for several years. We're about 30% lower than the historical average. Tax brackets were lowered in 2017, and that lowering was set to expire in 2025, but then they were extended by the big beautiful bill. So Becky talked about how they use the word permanent when they do some of these things, but she jokes that in the dictionary at Capitol Hill isn't always the same as the rest of the country. So what that translates to is that it's permanent until it changes. So that's the real big takeaway with what she's saying here. She also talks about the national budget, and she went into the numbers here. So in 2025, national revenue was about $5 trillion, and expenditures were $7 trillion. So obviously, at that rate, you can't continue forever. Something eventually has to give. So the thought is that, when things change, taxes will be higher in the future. And that's really, I'm sorry, I was getting some feedback there. But the thought is that, things will be, or taxes will be higher in the future. That's really important because your clients are going to be in their retirement years for a long time. So this is something that we really need to be thinking about today, when we're planning for the future. So, how do we address that? And looking at it from the national perspective, the government could change the tax brackets. Another thing they could do is also, change the income that counts towards the tax brackets. Or they can change, how and when assets are taxed. So we've actually had a recent example of this with the Secure Act. Inherited IRAs and stretch IRAs. You used to be able to stretch that, those withdrawals over your lifetime. And then, in 2020 with the Secure Act, that changed so that anybody who's inherited one over the last 5-6 years now has to exhaust that within 10 years. So, they're really trying to collect the tax on those qualified accounts sooner than later. So the last thing that they could do too is an adjusted income-based fee. So, this is something that a lot of you may have heard of in a term called IRMA. So, and Becky was saying that she really thinks that that's going to be the route that they start to go with trying to collect more taxes or have those kind of adjusted income-based fees in the future. So that can be really important when people are looking at RMDs in the future, or just fluctuating income for different reasons. So it's something that we really need to be mindful of when we're doing our planning here. So she goes on, she says, hopefully this low rate tax environment continues for a long time. But again, when you're only bringing in, $5 trillion and you're spending $7 trillion, at least eventually something has to give. So, helping people do Roth conversions is helping to protect them against potential tax bracket increases. But it's also helping to protect them against, these new rising income-based fees like IRMA. So, again, one of the takeaways here is that taxes today are on sale. Remember, we're in a 30% off sale compared to the historical average. So I'd really encourage you to go to our website, watch that webinar. It's under the education section on our website. Then go to webinars, and it's under the general education. So some really great resources for you out there. So now I want to get into the slide that we've got up on the screen here. So, what are the advantages of a Roth IRA conversion? So you're looking at potential tax-free growth is a big one. As long as they meet the qualifications, you hold it for 5 years, make sure you're 50 and a half before you start withdrawing, then this can be tax-free income for them in the future. If they do their conversions before they meet RMD age, then they don't have, they're not required to do those in the future from their Roth accounts. They could also potentially avoid IRMA fees. Kind of mentioned earlier, if you start taking your RMDs and you weren't planning for that, and then all of a sudden it bumps you up into a higher tax bracket or that threshold where you start having IRMA fees, that can be a big impact for people too. And then lastly is that this can also be non-taxable to their beneficiaries. So there's people talking about legacy planning that this can be a really important tool for as well. So why would you want to use a fixed index annuity in a Roth conversion? We just want to reiterate some of the advantages of this, what we call PTC. So the important benefits to your client here is you can, with an FIA, you can offer them some guarantees. We'll talk about a bonus product here or a boost that can help offset their tax payment. And we'll also talk more about the products that do that. It gives clients control over when they pay the taxes. So you have lesser taxes on partial tax conversions. We have this great program where you can do chunks of it over time, or you can do a full partial or full tax conversion, but it's fully customizable. So you can really maximize what they can do each year, and while you're making sure not to bump them up into the next tax bracket or create those IRMA fees for them. There's flexibility for your clients to determine when and how much to convert. And then again, the tax bracket, the tax advantages when they're in the lower tax brackets. So, through the partial tax conversion program that we offer, you've got ultimate control and flexibility with this. And really offer your clients a great tool to maximize their conversion opportunities here. So, how does this work with Equitrust? I hear all the time from people out in the field that Equitrust has the best program in the industry when it comes to partial tax conversions. So, with some other carriers, when you do a partial tax conversion, it creates a new contract every time that you do that. So if you're looking at doing this for somebody and trying to spread out those conversions over a number of years, you might be doing 5 to 10 of these. And with our competitors, you'll end up with 5 to 10 new contracts. And then when those come out of their surrender charge period, that can just be an absolute logistical nightmare. When you're trying to manage that in the future, or transfer those to another carrier. So the thing that Equitrust does that's unique is that we have a mirrored contract concept. So when you do this conversion, you submit a simple form. It creates the mirrored contract with the same effective date. You've got the same client roles. So you've got owner and annuitant, the same beneficiaries, the agents the same, all your allocation options carry over, and the crediting rates, which is important because Equitrust renewal rate history is excellent as well. And then also the riders that go on there. So you can do this on an income rider annuity, and generate guaranteed income down the road from that Roth conversion too. So again, this is as clean as it gets. You'll just end up with one mirrored contract at the end of the day. If you convert all the money, at the end of the day, we'll close out that traditional IRA, and you'll just have the one IRA contract going forward. So again, but that's why we get comments all the time that Equitrust is the best in the industry for this type of program. So in that digital sales kit for the Roth conversions that'll go out here, there is a link to the conversion form that you can use for this. There's 3 ways that you can do it. You can do a one-time conversion, so that can be either partial or a full conversion. You can set it up systematically over for a specified dollar amount, or you can do it over a certain number of years. So we do also allow tax withholding in the process. So the only limitation to it is that if you're going to do it, if you are going to withhold taxes, then you just need to do it over at least 3 years. And, we take care of all the tax withholding, send it to the IRS and the state, so it makes it as clean and simple to execute for you and your clients as possible. So just kind of wrapping it up here with the key points. So with our conversion program too, you're not limited to just the penalty-free amount. Like I was just saying too, you can do this without limits. The only kind of limitation here is if you want to withhold taxes, you have to do the conversion over 3 years, or do 33% or less of the accumulation value. Your clients decide how much they want to convert. They can actually do this, in the first contract year too. They can start it immediately, and you do one conversion each year. So this is a great opportunity to have those annual reviews with your clients, and kind of talk about how much they need to convert for that year. Also, a great opportunity can create referral partners, with tax preparers and attorneys that are having these same types of conversations with their clients. So it can be a really great tool to help strengthen some of those relationships. And then last thing to remember here too is the mirrored contract. It's not a new contract each time you do that with some of our competitors. It's just going to be one simple, clean contract with the great rates and features that you had on your base contract there. So again, the form for this you can access on our agent portal, agents.equitrust.com. It's really simple. You can kind of see some of the beginning pieces of it here. You can do the full or partial conversion. There's a couple other pages that talk about the tax withholding. We make that simple for you too. So definitely encourage you to go out there and take a look at that, if you're looking to implement this program here. So moving on, wanted to talk about some of the solutions that we offer this. So the first one is our Smart Boost Index. And this is really unique because it's the first of its kind fixed index annuity that has a 40% guarantee built into it. We call it the 40% boost. And we'll talk about why that works so well for the Roth conversions here. Because before diving into it, just wanted to point out quickly that for some of our newer, more unique products like this, we've created some dedicated web pages for them, and Smart Boost is one of them. We call it the microsite. If you go to our website, agents.equitrust.com/smartboost, you'll be able to find all the marketing material for this. There's some short videos, and you can also start illustrations and applications from this web page too. So a great resource to dig into this a little bit more. So wanted to kind of get into a little bit about what a boost is, because it's different from your traditional bonus products. So the key points on this is that it's a built-in guarantee. So your clients are guaranteed that they're going to have 40% more than they started with at the end of 10 years, and they vest into that at 4% each year. So we say that 4 is the floor on this. It's basically like a 4% simple interest guarantee. So they're going to get the higher of that, or their accumulation value at the end of the day. So, it really is allowing them the opportunity to have that underlying guarantee, but then still take a shot on the market. And in a lot of cases, because we have such great caps and participation rates on this, they're going to see a lot better return from this at the end of the day. The other thing with this is that it's also a great death benefit play. Since it's an annuity, there's no underwriting to it, and the 40% boost is included in the death benefit from day one. The stipulation with that is that the beneficiary just has to take the payout over 5 years. So last thing is that, with the boost design on this, we don't have any fees on here either. You can see some of these larger bonus products, it's a built-in guarantee, but, they might have a fee that's associated with that, or a vesting, the vesting that recaptures the bonus. Ours, they vest into the boost, but, at the end of the day, it's 40% guarantee at the end of 10 years there. So just getting into the specs on this quickly, we've got single premium product here, so they'll want to get that funded right away. Obviously with the guarantees on this, they'll want to make sure that they get that in as soon as possible. It's a $10,000 minimum here, and we've got a 10-year surrender charge chassis. You can write this up to age 80. The free withdrawal provision is a little unique. It's 7% of the premium starting in year 2. But then there are also some nursing home and terminal illness riders that can give them better access to that in those types of situations. And then, of course, we've got the 40% boost for the guarantee at the end of 10 years or the death benefit play. So giving you a look at the rates on this, the thing you want to know, again, go out there and shop some of these big bonus products. If you've seen a 20+% bonus, a lot of times your caps are going to be pretty low on this. That 8% S&P annual point to point is right up there with most accumulation products that don't have a bonus. So it's a great opportunity for people to take a shot on the market there. Also, a thing to note is the participation rate of the S&P at 50% is really strong as well. There's been some studies that show that you can capture more of the upside through a participation rate than other indexes. So that one does illustrate really low right now. You're seeing almost 7.3% from the history over the last 10 years on that participation rate index. So getting into why Smart Boost is such a great solution for Roth conversions. It's the only FIA that gives you a guarantee that you're going to offset federal income taxes at any tax bracket. So we've got the tax brackets on the screen here. You can see the highest tax bracket, marginal tax bracket right now is at 37%. So obviously with a 40% boost, you're able to guarantee people that they're not going to take a hit to their net worth by doing these partial tax conversions, and paying taxes while they're doing that here. So doing a quick case study for you. We've got Tom and Linda in this scenario here. 65-year-old married couple with 3 children. Taking a look at their income and assets, $215,000 a year in income. That would put them in that 24% marginal tax rate. They've got $175,000 in a traditional IRA and $350,000 in a brokerage account. So their concern here is about the rising taxes. So obviously from the conversation that we heard about from Becky earlier, this is going to be on a lot of people's minds. So how can we help them? We've got Joe in this situation looking at transferring the $175,000 from that traditional IRA into the Smart Boost and presenting the Roth conversion concept to them. With Smart Boost, to really get the benefit from it, they're going to need to pay the income taxes from that brokerage account. I will note that Smart Boost is the only product that we offer that does not allow tax withholding in the partial tax conversion process. So that's why clients that have these types of non-qualified brokerage accounts, this is a great opportunity for them. Those folks are often going to be in some of those higher tax brackets too. So really important to qualify these people to make the proper recommendation here. But then the boost guarantees them that they're going to have at least $245,000 at the end of the day, which is an increase of their net worth of $28,000. And then, when you have converted that to the Roth IRA, all those future gains are going to be tax-free. So, potential outcomes here at the bottom, even if Tom dies early, you're still looking at $245,000 guaranteed to go to the beneficiaries. If the indexes just completely flatline for the next year, they're still guaranteed the $245,000 that they could withdraw at the end. And, if the index performs well, with that cap or participation rate, they could get a lot more than $245,000. So definitely encourage you to run an illustration on this and see what that could look like for some of your clients. So moving on to our next solution for this, I wanted to point out a special that we have going on. We just extended this recently so that your clients can get an extra 3% premium bonus on the bonus products listed here. So I'm going to talk a little bit more about Market Edge because it's been a great tool for the Roth conversion story. That special also applies to the Market Power bonus, the Market 10 bonus, and our Wealth Max bonus life. So all you need to do is get the application in by September 30th. And then you've got until the application sale date, which is 6 months from when the application was submitted, where you can still fund that and capture that for your client. So a really great opportunity to have these conversations over the next 2 months and get those clients locked in with that bonus just by getting your application submitted. So diving into the market edge here, some of the highlights on this. It is a little bit more flexible for the premium on this. You can add premiums in the first year. It is a 10-year surrender charge period. But then the bonus on this is what is really unique. And by structuring it this way, we don't have to charge a fee. And then you'll see why it also is really great for Roth conversions because they get a 4% bonus on the accumulation value in the first 3 contract anniversaries. So right now with that premium bonus special, you're looking at getting them 11% on all premiums in the first year. They could be 360 days in and add, another $50,000 to this, and they're still going to get that 11%. So great opportunity there. Issue ages on this up to age 80. And then it's kind of putting up some of the prospecting opportunities for this. So give you a quick look at the bonus structure on this and why this can be a great opportunity for your clients with the Roth conversions. You get the 11% in the first year on anything that comes in. And then on your first contract anniversary, they're first going to get their index credits. So you can put them in a fixed account to give them some kind of guarantee there. But they could also take a shot on some of the indexes. We're going to credit whatever that index did for the year first, and then we're going to give them that 4% on the accumulation value. And that happens on the first 3 contract anniversaries. So, thinking about that, if somebody wants to do a Roth conversion early in the first year, that's great because then those 4% accumulation value bonuses are all going to be tax-free on the Roth side. So, great opportunity, provide your client more guaranteed tax-free growth that they can take out from that Roth once they've met the qualifications there. So, giving you a look at the current rates on this, looking back, we've had these rates out here since March. So, that's one thing about Equitrust is that we have a really great renewal rate history. We're very competitive on our rates. We're not, typically not the first one to move one way or the other, but, we'll give you the opportunity to really have a conversation with your client, identify the best fit, and then make sure that you can capitalize on that. When you submit an application, our rate hold is generally 60 days from when the application was submitted. So great opportunity to get that premium bonus special and then lock in some of these rates for your clients here too. So I want to take a look at example of how much the client or how much of the client's taxes could be covered by the bonus on Market Edge. And here's the parameters that we're looking at. We've got $100,000 we put in, issue age at 65. They're going to start doing their Roth conversions starting immediately and do it over 10 years. And then for the sake of this example, we're going to assume a crediting rate of 3%. And then also the federal and state tax withholding of 22%. So we'll kind of buzz through these numbers here, but we're showing what you put in is adding the bonus. If we look at converting over 10 years, we're basically taking 10% of the accumulation value, converting that to the Roth IRA. They're going to withhold 22% for taxes. So you subtract the $2,400 here. You've got $8,600 going into the mirrored contract, and then your interest and accumulation value bonuses are credited. So adding those back together to aggregate at the end of the first year, they'll look at $116,000. But we're going to kind of just walk through this real quickly, showing you what the taxes are on these. But at the end of this, you're looking at you had a premium of $100,000. We help them cover their tax bill of $30,860 because Market Edge is one that you can have the taxes withheld in the process. And since we did this over 10 years, we showed them being able to cover that 22% tax liability. They got a bonus of over $25,000 in that process. So looking at those numbers, we help them cover 81% of their total tax liability at that 22% tax bracket. So this is a great conversation to have with your clients that if you're in that most common tax bracket of 22%, we can help you cover a huge portion of that, even if you're doing this over a 10-year period. If you're looking at doing it in years 1 or 2, it's going to be a lot higher percentage because 22% tax liability. If you've got a 23% bonus right now, it's pretty easy to see that you're going to be able to cover their taxes if you're doing those Roth conversions early. So getting started with this, in some of the handouts and also that follow-up email, these marketing pieces, we've got some great FAQ pieces and this kind of rules around tax conversions. These are also available on our agent portal, agents.equitrust.com. There's a form section where you can access all this as well. So that kind of wraps up the Roth conversion piece of it. I did want to quickly touch on our Bridge long-term care annuity because this has been a huge topic for us this year. Lots of people have concerns about how they're going to fund long-term care in the future. You also hear a lot of people that'll have a story about a loved one that went into a nursing home. That loved one could have been a millionaire, but their retirement plan could have been completely blown up by a long-term care event. And Bridge is an opportunity to help give people long-term care coverage where nobody gets declined in the underwriting. We can help them leverage their money better for long-term care. And then it's also a tax-free benefit if they use it for long-term care purposes. So, if we're talking about maximizing your dollars to help offset taxes, what better way to do that than with a tax-free long-term care benefit? So, we'll kind of go through Bridge here. The dilemma that we're looking at with this is that long-term care is a problem that's not going to go away, and there's becoming less and less solutions for them. There's not many carriers that are still offering this. Over the last 15 years, it's almost 90% of the carriers have exited the space. You're looking at less than 15 carriers that are still offering those traditional long-term care policies. 26% of caregivers are using their own money, own income to help offset these long-term care expenses. And 88% of adults between 50 and 80 want to age in place and try to find opportunities to do that. So looking at some of the other numbers here, if you try to fund this through a traditional long-term care policy, you're looking at over $5,000 a year for a couple age 55. A lot of people aren't necessarily thinking about that type of planning until they're getting a little bit more advanced in age, and those costs only continue to go up. So we've also got skyrocketing costs on the other side of it when you're looking at a semi-private nursing home room. It's over $9,000 a month here. Assisted living is really expensive too, and over $6,000 for home health aid. So you can use those traditional long-term care policies, but then if you ended up passing away suddenly and not using that, there's zero residual value of those traditional long-term care policies, so nothing gets passed on to your heirs, and that's a huge objection that people are running into when they're trying to have these types of conversations about long-term care. And that's where Bridge can really be a solution, because again, you can offer people long-term care coverage, nobody gets declined in underwriting, and then it's on a fixed index annuity chassis. So if you did pass away suddenly and didn't need it for long-term care, the full accumulation value still goes to your beneficiaries in that type of situation. So it's kind of touching on this, again, the fixed index annuity chassis. The other piece of this too is that there is a wellness program attached to it called the Never Stop Wellness Program. We actually just hosted a webinar on this last week, which is on our website now too. But it's a program that's designed to help people age more effectively in place. It's just simple everyday things like trying to get better sleep, getting your hearing tested to help stave off dementia. If you have hearing loss, you're more likely to develop dementia. So we're trying to encourage people to do things that'll incrementally help them age more effectively, potentially decrease the need for the long-term care, or at least delay it, and then you make it a shorter period of time that it's needed for, so you still to maximize your money and still be able to leave more to your beneficiaries in that process. So looking at the product details here, we've just updated the issue ages on this at the beginning of this year, so we can issue this from ages 50 to 80 now. The initial premium on this is $50,000, and that's because there's minimum long-term care benefit amounts that we have to meet when they go on claim. But we're actually seeing the average case size on this is about $110,000. So, when you start having these conversations, it can really open up some big cases for you. It is a flexible premium product. The other big update that we had at the beginning of the year was that the coverage ratio for long-term care is applied to all premiums in the first 5 years. So a huge opportunity to lock something in like that for your clients and allow them to fund it over the next few years here. And then, 10-year chassis, and you've still got the fixed index annuity accumulation value potential. So show you the rates on the next slide here. When we were designing this, really wanted to give it some teeth for accumulation potential. The rates on here are, as good as, any of our other accumulation products. So you can see 9% on the S&P annual point-to-point cap, and that 50% participation rate on the S&P here as well. Some really, really great opportunity for your clients to have some accumulation in this long-term care solution. So touching quickly on the underwriting, I mentioned nobody gets declined in the underwriting process. Again, worst case scenario is that they're going to come back at our secure rating We do have an underwriting guide for this. There's just 5 pre-screening questions. The way that it works is if they answer yes to one of the first 3 questions, it's automatically going to put them in the secure class. But from there, if they do, go through the full application here, you'll submit it, and within about 10 minutes, you'll get an email telling you they've either come back at prefer, standard, or secure for the underwriting class. There will be some people, if they, maybe they're in good health, they'll go to the doctor a lot. They may need to do a video call to determine their underwriting class. But once that's completed, again, within about 10-15 minutes, you'll get that email showing you what the underwriting class is. So quick, easy underwriting again, where nobody gets declined. So next slide here, wanted to show you the coverage ratios on this. People get really great leverage through this. This is available on our agent portal. I wanted to show you the whole thing to show that it's broken out, but I'll actually kind of zoom in on the next slide here so you can see this a little bit better. You're looking, if somebody's in good health, this is a tripler for their money, and that's to start. So we apply the coverage ratio on day 1, and then we also have kind of a built-in inflation protection to it, where it grows at 3% for 20 years for your long-term care benefit base. So, in some of these preferred ones, you're looking, at the end of 10 years with index growth. I've seen a lot of these where it quadruples. So, really encourage you to get an illustration on these and kind of dive into the numbers to see what this could do for some of your clients. So, some quick product positioning on this, since it's obviously a little different than your traditional fixed index annuity sale. This is, again, guaranteed approval for long-term care benefits. So, great way to open up conversations that way where people know that they're not going to get declined in the underwriting process, which is a problem with some of the traditional long-term care policies out there. If they didn't want to have their medical records checked, they can just bypass it. Or if you know that they answer yes to one of the first 3 questions, it doesn't even do that check. It just automatically goes in the secure rating. This is an alternative to traditional long-term care coverage. So, it can, reduce the costs of the long-term care coverage and, some of those underwriting limitations that you have with other companies. And then, this is also great for annual reviews, just going in and starting that conversation. We've got an advisor who's had great success with this, and, you go into your annual review and ask them, what do you think about long-term care? A lot of people think it's expensive, that it's hard to qualify for, where, there's been a lot of innovation in this industry, specifically with Bridge, that, we have a solution where you can fund it once, you don't have to put anything else into it, with money that you already have. Nobody gets declined in the underwriting, so it's not difficult to qualify for. This is a great opportunity to drive those conversations further along and really help provide answers to some of the concerns that people have out there. So kind of wrap this up with the microsite. Bridge is another one of these unique newer products. We've had this on the market for almost 4 years now, but this was our first microsite that we offered. So agents.equitrust.com/bridge will get you to all the marketing materials. You can access some of the calculators, illustrations, and get applications started here as well. So really great tool on that piece of it. You can also reach out to our sales desk with questions, reach out to the folks at NFI. I'm sure that they'll be happy to answer questions on anything that we've talked about here today. Not sure if we've got questions in the chat, but I'll kind of loop Bill back in here. If we've got anything in the chat that I can help address, or any other comments that you want to add, Bill.
Yeah, I think like our job here at NFI and our job as advisors is to boil this down to you and how you position it. And really what this does is it creates opportunity. I mean, we're talking about subjects that most advisors are not talking about. I know for a fact that these are issues that your clients are concerned about. That's why I love the idea, Ryan, of talking about these things in annual reviews, maybe even your newsletters, to your clients, whether that's an email blast or, a physical piece of mail that you're sending to them. Because these are issues that are forefront on their mind. It's not just how can I grow my money as safely and quickly as I possibly can. It's, how do I get my money to my kids, when I'm through using it the most tax efficient manner possible? And how do I avoid the costly expenses of the nursing home? So those are forefront on their mind. I mean, and when you get down to why it is important to them, I mean, we did educational workshop last week, and in both of those meetings, I asked the audience, I mean, how many people here think that the tax bracket or your tax brackets will never go up again? Not one hand went in the air. We know what the rules are today. We know what rules we have to play by. And you can have those kinds of conversations every single day, because it's not about how much money you make, it's how much you end up keeping or how much money you end up moving on when you're through using your money. And again, when you position it as taxable, tax-free, or taxable, tax-deferred, or tax-free, every single one of your clients is going to say, I want my money in that tax-free bucket. Then it becomes your job to position it and present it to them so that they have that courage and conviction to make the adjustment, because they are going to move off of center if you position it properly. And that's where I think even further conversation with us, and obviously we appreciate the work that Equitrust does in making it easy for those Roth conversions, and some of the nursing home products that they have. I would include the Wealth Max bonus in that, Ryan. I'm sure you would too. We just didn't talk about it today. But for us at NFI, what we've done is we've taken how it is to position that conversion, lay it out, even though it seems like a complex issue, lay it out so that it's easy to understand, so your client can look at it and say, you know what, that just makes a lot of sense. That's simple math, and I want to make sure that I take advantage of this, because just sitting here and hoping my taxes stay the same, that's not a plan. So we can position that plan to you as the advisor, so that you can feel confident about it, but more importantly, so that your client has the courage and conviction, to make that adjustment, because they're ultimately the only one that can do that. So I would encourage all of you to make certain that you call in here to NFI Solutions. Our number will be up here at the end when Louisa comes back on. But I would really encourage you all. The ability to have these conversations is easy, and we've been teaching our agents to do it for a long time. So I think the ball is in your court on that one if you want to be that well-rounded advisor, because that's what we're ultimately advocating for every advisor that we work with, is to start addressing issues like this, just because it really does make you a well-rounded financial planner.
Well, thank you so much, Bill and Ryan, for an excellent presentation today. We also want to thank everyone who joined us today. We appreciate you spending part of your day with NFI Solutions, and hope today's webinar provided valuable insights that you can put to use in your own business. If you have any additional questions about today's discussion or the Equitrust solutions that were presented, please reach out to NFI Solutions representatives. We'd be happy to continue the conversation and help however we can. We encourage you to watch for future NFI webinars, where we'll continue to bring you timely market updates, educational topics, and carrier insights designed specifically for independent insurance professionals. Thank you guys again for joining us today, and have a wonderful rest of your day. We hope to see you at our next webinar.